Good morning, everybody. It's Wednesday, August 28th, 5:26 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1 3/4 at 391. November soybeans down 7 at 979.5. December Chicago wheat up 1.5 at 537. December Kansas City wheat down 1/4 cent at 546.5. December spring wheat down 1/2 cent at 573 3/4. Let's start off with this story that the Journal did on the ag economy.
So, poor grain prices are forcing farmers to make difficult changes. Prices have been under pressure due to projected bumper crops. And because of this, many farmers are cutting back on fungicide and fertilizer use. In addition, farmers are postponing farm investments that could improve productivity and earnings. Grain prices are also struggling as Brazil continues to dominate the global corn and soybean markets, and Russia is commanding the wheat market. According to the University of Illinois, farmers in the state stand to lose up to $118 per acre of corn and $81 per acre of soybeans this year.
This was a decent write-up that the Journal did that's very much geared toward like Joe Public. Like if you're not familiar with what's going on in the Midwest with the ag economy, this gives you a decent idea as to what's going on. One of the things mentioned here, prices for corn and soybeans were range bound in the second half of the 2010s, weighing on farm returns. The record high prices in 2021 and 2022 gave farmers a boost, but momentum has once again turned against them. So there is some comparison to that period, say 2014 through mid 2020, as it relates to just prices on the board and cash prices. I would argue certainly that what we're seeing right now is drastically worse than what we saw in that period for a couple of reasons. The first one is that input costs are up 20 or 30%, depending on your operation. It could be more than that. And those price increases for all of your input costs, I mean, land seems to always go up, but a lot of it goes back to COVID. A lot of it goes back to the COVID inflation that we saw. So your costs are up, but the output prices, your corn and soybean prices, are basically the same. The other thing would be interest rates. You got much higher interest rates to deal with. Your borrowing costs are elevated. It makes things very difficult as it relates to storage. You know, the bins aren't worth what they used to be worth because of the interest rate situation. What we're seeing here is balance sheet deterioration. There's a lot of working capital being lost. There's a lot of equity being lost. And a lot of farmers are just starting to adjust their balance sheets. And a lot of farmers haven't adjusted their balance sheets. What are the big items that need to be adjusted? Take your equipment inventory, mark it down 20%, 30%, 40%, depending on the situation. Grain inventory, if you're still sitting on it, mark that down $1, $2 per bushel. Expected revenue for this year, mark that down from where you last checked it. It's going to be there are some very difficult conversations being had with bankers right now and will be as we move forward. So make no mistake, the ag economy, and specifically the economy for the Midwest corn and soybean grower, is in the midst of a full-blown recession. It is. And it's not something that Wall Street cares about or that anybody else cares about. We care about it. These are tough times. The ag economy, as it relates to you guys, is very much inversely correlated to the regular economy in a lot of instances. Look at 2022 as an example. In 2022, corn, soybean, wheat prices were very, very high. Lots of money being made on the farm. At the same time, Joe Public was dealing with inflation, dealing with a lower stock market, dealing with a lot of issues, and that was when things were best for you guys. So there is kind of an inverse relationship there. Tough times, guys. Tough times.
Hot and dry weather helped boost grain prices on Tuesday. A heat wave and minimal precipitation across the Corn Belt could have a detrimental impact on crop conditions. The unfavorable forecast caused corn, soybean, and wheat futures to rise yesterday. The extreme heat is likely to ease by the end of this week. Even with the small bounce that we've seen in the market, grain futures are still trading at their lowest level in 14 years compared to other commodities. The outlook for abundant supplies, both domestically and globally, continue to weigh on prices.
The headline would lead you to believe that we're doing something special with prices, and we're not. So corn, I suppose you call this a reversal to the upside yesterday. We have a double bottom essentially at 385 on the D's corn contract. We rallied yesterday, but this is still very much a bear market. Soybeans, similarly, we bounced 25 cents from the low. We've almost given back, I think, everything that we gained yesterday overnight. The heat has moved, the excessive heat has moved east. So your heat advisory today is in parts of Indiana, Ohio, and then the East Coast. I'll say this about soybeans in particular. If the market actually believes that we're losing yield potential because of the heat, they're going to come in and buy the dip this morning and you'll finish higher. That would be my guess and experience. That is not a trade recommendation by any stretch of the imagination. But if the trade is firmly of the belief that yield is being trimmed, I think somebody's going to come in and buy the dip today. Also, keep in mind, I mentioned first notice day and all these basis contracts earlier in the week. Most of those, the lion's share, have probably been priced or rolled by now, and certainly they'll all be priced or rolled by the close of business tomorrow. That's another factor that over the near term could kind of take the lid off of price action. Farmer selling will be reduced, at least momentarily, until harvest rolls around. It's another factor to consider today.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Every penny counts in this sort of environment. Yesterday's video was about capturing carry in the new crop soybean market specifically. So you've got November HTAs or short futures positions. When should you roll those forward to capture carry? Specifically, like you want to go Nov to March. Okay, what sort of level should we look for? I went through full carry calculations, laid out the parameters. I understand that this is not something that's going to make you guys rich this year, especially if you're borrowing money. The carry in the market may simply be enough to cover your storage and interest costs. But if it's worth doing, it's worth doing right. And for a lot of you guys, you're not going to be able to deliver everything at harvest. So it's a logistics issue for a lot of people. This is what I call, again, hardcore grain marketing information. Is it super entertaining? No. It's dollars and cents. It's mathematics, but it's must know stuff. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
Brazil's soybean acres are slated to grow at their slowest rate in more than a decade. China's state-owned food processing company COFCO estimates that Brazil will plant 116.1 million acres of soybeans during the 24-25 season. According to CONAB, Brazil's version of USDA, 113.7 million acres of soybeans were planted during the 23-24 season. Soybean acres are being reduced due to prices hovering near four-year lows. Despite fewer acres, COFCO expects Brazil's soybean crop to reach a record 168 million metric tons, a 14% increase from the 23-24 season.
So USDA projects that Brazilian farmers will harvest close to 117 million acres of soybeans. COFCO says maybe a little bit less. I mean, if you're talking about a million acre difference here, I don't know that that's overly substantial with regard to price action and that sort of thing. We're still increasing. They're still increasing every year, just like inflation. We're still increasing, but it is at a lower rate. So make no mistake. I mean, Brazil right now has the potential for a monster bean crop. I think USDA has it penciled at 169 million, which would be a record by a wide margin. Of course, for that to happen, you need to see weather cooperate, and that's the bigger deal. That's more of an unknown. The acreage is a known to some extent.
Argentina's soybean acres are expected to rise significantly. Expansion of soy acres could be the largest in more than a decade as farmers trim their corn acres due to concerns over a leafhopper outbreak. The insect caused substantial damage to the previous corn crop. It's projected that Argentine farmers will plant 4.9 million acres less of corn because of the insect. That's according to the Rosario Grains Exchange. The majority of those acres are anticipated to be replaced with soybeans. There is a possibility that the extremely cold winter killed an extensive amount of leafhoppers, and that could lead to a less significant reduction in corn planting than expected.
I had a couple auxiliary charts here that I figured I'd run through. So here's soybean production. Brazil and Argentina combined versus the United States. Brazil and Argentina combined expected to be 220 million metric tons. The USDA or US rather expected to be about 125 this year. So they continue to expand, and most of the expansion is in Brazil. Almost all of it's in Brazil. Argentina is seeing very little expansion. When you look at the global top three, Brazil continues to get bigger and bigger and bigger. The U.S. and Argentina kind of flatlined and don't really change much because we just don't have the room to increase acreage. We don't have the ability to do that. If anything, we're losing acres, I think, on an annual basis. And Argentina is basically, flat. They'll have a soybean crop in the high 40s, low 50s, and that's kind of where they've been for a long time now.
USDA reported a flash sale of corn yesterday. U.S. exporters sold 5 million bushels of corn to Mexico for delivery during the 24-25 marketing year. Total U.S. new crop corn export commitments are the fifth worst in the last 10 years.
Mexico was the largest buyer of corn, or has been during this current marketing year that ends in a couple of days, and they will probably be the biggest buyer of U.S. corn in this forthcoming marketing year. China has the ability to come in and move the needle. Mexico is more of a known. I understand that there are still some issues as it relates to imports of GMO corn for human consumption. They're going to keep buying GMO corn from the U.S. for livestock feed, which is the lion's share. It's 95% or more than that. Just a very small percentage for human consumption that could be impacted by some of these trade negotiations. But I mean, it's good to see Mexico on the board again. As we've said about the soybean flash sales, it's just not enough. We need some bigger quantities. What did cattle do yesterday?
They were mostly higher. Feeders were down 30 cents to $1.62 higher. Live cattle were up $1.12 to $2.47 higher. Box beef was lower yesterday. Choice ended the day at $315.90. That was down $1.44, and select ended the day at $300.19. That was down 27 cents.
Outside markets this morning, U.S. dollars up a little bit, stocks about flat, bonds up a little bit. Crude oil is down $1.20 in the October WTI at 74.34. Have a great day, guys. We'll talk to you on